What is going on, man? What is going on, everybody? 1 cent spread strategy. This is the checklist. This video was so long. This information is a lot of information, so I broke it down into like 3 videos. This is the checklist. We're gonna go through what I like to look for, and how I like to enter the trades. We're gonna look at the daily chart, intraday charts, indicators, level 2, intraday patterns, volume. We're gonna go through all this stuff. The next 2 videos will be actual recordings of live trades. There's 2 different ways you can trade this strategy. One is at the opening. The other way to trade this strategy, mid-morning, early afternoon. So there's different ways to trade it. This is not in any particular order per se, but I just started the checklist and just kind of went down and just kept writing. So this is probably hard to see. You might want to take a screenshot of it and blow it up, or you just play the video over and you can, take notes with the video, whatever works for you. Let's take a look at the daily chart. So this is CPB. This is from Campbell Soup Company. I want to see on the daily chart some kind of a downtrend, and we want to make sure that there's a range. So in other words, for instance, look at this price action right here at $40. Let's say that this breakdown did not happen, right? Let's say we're up here at $40. We can see it. We can see the price action actually touch $40 3 different times. Support once, support twice, 3 times, and it finally broke down. So we want to see that there's a potential move to the downside to another level of support, and we want to make sure that the 200 moving average is above the price action. When we see the 200 moving average above the actual price action, that tells me that the trend of this chart is a weaker chart. Is heading down. You can actually trade stocks. You can actually trade this strategy where the daily chart is showing strength. Let's say the price action was up here and it was coming down towards the 200 moving average and it could bounce. But I like to see daily charts that are weak, because normally when the price action is weak on the daily chart, the intraday move is a little bit better. So I like trading them that way, but that's just my preference. So again, real quick, daily chart, downtrend, and we want to see that there's a potential move to another key level of support. So you may have to go back 3 or 4 years, 5 years. I'll go back as far as 20 years and just kind of look at everything, just for my sanity, just to see what's going on real quick. I don't look at it too deeply, but 2 or 3 minutes, put a couple horizontal lines in to see exactly where it could sell off to. That's just what I like to do for when I'm studying my charts in the morning. All right, so let's talk about the intraday chart. I'm looking for something that gapped down, and I like to see stocks that are gapped down 3% or more, 3% or more. If they're down 1%, 5.5%, there's a chance that the stock will fill its own gap and reverse. If they're down 3% or more, normally they like to continue that trend. So that's what I like to scan for right away, is 3%, right? So we'll get into how I find them, but 3% or more is good. So next, let's talk about these indicators real quick. The indicators that I like to use, all right, I used to use the 200 SMA, simple moving average. I changed it to the EMA. The reason being is because I was talking to another trader. Shout out to Bully Bear. We was going over the difference between the SMA and the EMA, and it seems that the EMA is better for scalping. This is a scalp style strategy. The EMA does better with the scalp style strategy. So these are the EMAs. My indicators are the 200 moving average. The 200 moving average, this EMA right here, 200 EMA. That's this yellow line. This blue looking line right here, That's my 20 moving average. And this green line, this is one that's very, very important. This green line, the trigger line, that's the 9 moving average. Then up here you can see VWAP sitting up here. This red line right here is my VWAP. One of the most important indicators for this strategy is this guy right here, RSI. RSI is big, man. It's a big deal for this strategy. I will go over that shortly. So, all right, so VWAP, I like to use the VWAP because it's the king, man. It's one of the most important it's one of the most important indicators. It's used by millions of traders, you know, institutional traders, hedge companies, banks, you know. VWAP is king, man. So VWAP and the 200, those guys are so important. But a reason why I like to use it is because I want to make sure that for this style of strategy, I want to make sure that the VWAP is above my price action. It's telling me that the price action is trending down. It's hurting. It should continue that trend. So these are just indications, right? We all know that. Again, when the 200 moving average is above the price action like I showed you on the daily chart, it's the same thing for the intraday chart. It's showing that it's on a downtrend. That's what I'll use it for. If this moving average is underneath the price action, I don't like to short it most of the time because it usually the price action goes long, goes north. So I like to see the 200 moving average above the price action. So the 20 moving average is important. I like it. I like it. I learned it from Bully Bear, so I added it. I like how it looks on the chart. Sometimes it shows that the price action can pull back to it if it gets away from it and vice versa. So I like using the 20. This 9 moving average, this is our trigger here. We like to see the price action hugging very tight. We like to see the price action very, very close to that 9 moving average. We want to see the price action just below the 9 moving average. If it's above the 9 moving average, this thing could take off. So we want to make sure that the price action is sitting just below it as it's consolidating. That's very, very important. The RSI, let's get to the RSI real quick. As far as the RSI goes, this indicator doesn't mean anything when the volume and the momentum is in the price action. You can see right here where it's consolidating and going sideways that so is the RSI. Once the momentum came in and the volume spiked, this indicator means nothing anymore. I mean, you can see it blew right through this low level here. So the RSI is, this red line shows that on the okay, let me slow it down for a second. The RSI I use is 70, 30, 14. That's the settings for my RSI. It's pretty much default. So when the price action up here is pushing up towards this level, this red level where it's at 70 on the RSI, normally that's telling me that the price action has been bought too much. So if it's way up here, then the price action is probably going to fall down. If the price action is down here, right, this is the 30 range. This means that the price action is oversold. It's been oversold too much, so it's probably going to bounce. And this indicator, the RSI, actually saved me a few times last week. Shout out to Rock Solid. I was in a trade and he was looking at the RSI and I wasn't using it at the time, and he was like, "Look, man, you might want to get out of the trade because the RSI looks like the price action is oversold." So once it's been oversold, the spike came, and immediately after he told me that, I looked at level 2, literally flipped. And it went from the axe being heavy to the bid being heavy, and I sold my position, and literally 10 seconds later, the price action did spike. So ever since then, I took the RSI indicator and I added it to all my old charts, and I was looking at them, and I'm like, dude, every time the price action spiked and went against me, the RSI was sitting very low to the ground. It was showing that it was oversold. So that's very important for this strategy. So the RSI is just for my entries. I don't look at this after I'm in the price, after I already entered the trade. I'm no longer looking at the RSI. I'm only looking at level 2 at that point. The RSI is important because if it's too low, then we could get squeezed. If it's too high, that's really good. That means that I can load up on my shares because it should come down. Now, again, this is just an indicator. You could get squeezed even if it's up here at the top. It could still go up. If it's down here, it could still break down. But it just gives me an idea of what's going on before the breakdown or the breakout. So it's very important for me that I know where the RSI level is. So for instance, you can see right here, the price action is just consolidating. This is a perfect setup. We see a bunch of consolidating. We have the 200 moving average above the price action. The 9 EMA is very, very close, but it's sitting above the price action. And the level 2 was very heavy on the AX. So when this breakdown came, it had room on the RSI to go down. So once this happens, I'm no longer looking at RSI because once the volume comes in, look how low the volume is before the breakdown. See how low it is? And then the volume comes back in heavily. Now we have momentum created in this price action. So this indicator means nothing now. This thing it blew right through the 30, the low range, and went all the way down to like 10, and then it bounced back. So I'm not looking at this when I'm in the trade. I'm only looking at RSI before I enter it, just to see where the range is. All right, so let's take a look at level 2 for this stock. Level 2 is over here. You got the bid, you have the AX, right? So once this consolidation finally broke down, it was a clean entry because I knew that the RSI was not oversold. I knew I had room to come down. The volume was very low, so it was consolidating. The price action was in a consolidation phase. The 9 EMA was sitting just above the price action. This right here is an A quality setup, period, hands down for this strategy. It's a 1 cent spread. This is why the 1 cent spread is so effective, because of the risk management. So you can load up your share size. Normally when I'm trading reversals, I'm looking at a 30, 40 cent spread. I'm looking at a 30, 40 cent risk in case it goes against me. These guys don't, when they go against you, it's because it's 90% of the time it's because you did something wrong. You entered a stock where the bids were too heavy, well, the price action wasn't consolidating, the RSI was too low, the trend was going up, it wasn't going down. So it was probably another reason why it went against you. This is a very, very low risk strategy. I'm 9 days in a row. I've won 9 days in a row with this strategy. I traded the first 2 days paper trades. The last 7 days have been live trades, small share size, a few hundred shares here, nothing major. Except for JCPenney, I shorted that with like 4,000 shares. That's because it was a $2 stock. So I loaded up on that. So trying to get like a 10-cent move. But anyways, this is a very low risk strategy because it's a 1 cent spread. That is the most important part. That's why it's called the 1 cent spread strategy. If you look over here, even when the momentum is in this price action, this says 34.39. If you look over here, 34.39. That's down here. So that means that this momentum is already going crazy. It's already going down, right? And look, the spread is still holding this 1 cent. It's still holding that 1 cent strategy on the way down. So this strategy, it's moving slowly. Like, it's not going rapid, and you got this 30, 40 cent spread. Like, you losing money as soon as you get in. You're losing money when you get out. This is a 1 cent spread strategy. There's guys in the chat room, they're like, what about this? What about that? And the spread is like 5, 6 cents. It's pretty close, but it's not 1 cent. I do not trade this strategy unless there's a 1 cent spread difference, period. So before the breakdown, right over here, before this breakdown, this consolidating, it's 1 cent.